Good morning and welcome to Managerial Accounting. Today is the day we were scheduled to start Chapter 16, but we actually did a brief introduction to Chapter 16 in our last class. So, because today is the first day after we finish Chapter 15, today's the day that Chapter 15 problems should be submitted for grading. I've had a few questions on that problem. And so I'm going to start with just a brief overview, and that's what you're seeing on the screen right now, is the very last section of the Chapter 15 problem. So I'm glad if you had questions that you asked them. I hope you find this helpful. If you still need more guidance after I go through this, please just reach out after class. Send me an email, schedule an appointment on Starfish or some other way. Because really, this last section of the exercise relies just as much on your algebra skills as it does on the accounting skills. And so I can understand why it might be a little bit awkward or difficult for some people to work through this. So I'm going to give you some hints. And as I said, if after class, you're still struggling, you can always come back and rewatch the very beginning of this video once it's posted to YouTube after class, and let me know if you do still have questions. So let's take a look first at what's given, or what it is we need to find. So we have account balances columns, one for the end of January and one for the end of February. And the information we have is for the month of February. So we're trying to figure out, where did we start, what happened during the month, where did we end up. This column is for the costs that were added during the month, the costs that were incurred during the month of February. So let's start. We're just going to go down the list with the information that's given. That a little easier to see. So let's start with these first two pieces of information. The materials inventory went down by $3,000 during the month, and at the end of the month it was 50% of what it had been at the beginning of the month. So when we think of those two things together, what is that telling us? $3,000, the $3,000 decrease represented 50% of the total at the beginning of the month. So we had twice as much at the beginning of the month, or $6,000, and at the end of the month we had just $3,000. So you didn't really need to know much about accounting. You had to know how to do the algebra. Again, I can understand why that would be a little bit confusing. This is not supposed to be algebra class. What are we told next? Well, direct materials purchased during the month were $12,600. So I will remind you about the formulas that you have over here in Blackboard. This is in the Chapter 15 folder, the page called Basic Calculations for a Manufacturing Firm. And we're going to be looking at this formula to find direct materials used. Beginning materials inventory, we now know that was $6,000. Plus purchases of materials, we just read, and that's what this red box was around, was $12,600. So we had a total of $18,600 worth of materials available for use. And at the end of the month, we had only $3,000 worth left. So from that, you should be able to determine the direct materials that were used. I'm not going to fill in all of the blanks for you. I want to leave some part for you to do on your own. The next thing we are told is that direct materials used were 3 times the direct labor incurred. Another way of stating that, or restating that in math terms, is that the direct labor was 1/3 of the direct materials. So once you know the direct materials that you should have just been able to fill in, then you should be able to answer the question about direct labor as well. Next. We discussed on Tuesday in our last class that the total cost incurred will always include the three components of product cost: direct materials, direct labor, and overhead. And we are told here that the total cost was $28,700. So once you've figured out what this one and this one are, we know that these three things together equal $28,700. So you can find the one that you still don't know, the factory overhead, by subtracting the two that you do know from that total. Next, total manufacturing costs incurred during the period were 70% of cost of goods manufactured. So you can rewrite that as an equation. We already know the total costs incurred were $28,700. That was given in the previous line. We now know that that is 70% of, and when you hear the word of, you should be thinking times cost of goods manufactured. So you can solve that to find our cost of goods manufactured. And then in the next line, you're told total manufacturing costs incurred are $9,000 less than cost of goods sold. And Seth, I just realized we read that wrong when we looked at this earlier. So you'll want to take note of what I'm about to do here. So total manufacturing costs of $28,700 were $9,000 less than cost of goods sold. And I think, Seth, we were talking earlier, we had used cost of goods manufactured there, but that's not what it says. The total cost incurred, $28,700, is $9,000 less than cost of goods sold, not cost of goods manufactured.
Okay, thanks.
Yep. And so from there, you should be able to solve for cost of goods sold. And then I think the last two pieces that we have not yet filled in the blanks would be this, whoops, why is it not doing what I want it to do? Would be, there we go. So the last two pieces that I think we have not yet addressed are this and this. And both of those you'll be able to solve with what you already know and looking at these last two formulas on the basic calculations for a manufacturing firm page in the Chapter 15 reference materials. So if you look at these, this formula, you know all of those except one thing. And the one thing is what's left here in these red boxes. So I think with that explanation, you should be able to go back and complete this last section of the Chapter 15 problem at this point. As I said, I will be happy to answer more questions about that. So the question was just posted in the chat, where do we find these formulas? So if you're in Blackboard and you go to the reference materials area and go into the Chapter 15 folder, it's this link right here. So unlike everything else on this page, all the other reference materials, you have to click on that to be able to see the formulas. So that one's set up a little bit differently than the ones with the pictures. So that's where you find the formulas, and you should at this point be able to go through all the rest of the calculations that you need to fill in the last part of that problem. As I said, though, if you do run into more questions, please feel free to reach out. I'm always happy to help on anything other than exam questions. So for those of you who did ask questions before or sent me an email and asked for help with this, hopefully that helps, and just let me know if you get stuck again. And what we're going to do now, unless someone has a question you want to ask, we're going to go to the chapter 16 exercises and pick up where we left off last class. So we had done chapter 16 exercise 1 together in class, or I asked you to do it at the end of class, but it was review of what we had already been doing from chapter 15. So where we're going to start today is on the second exercise, and this is a materials issuance report for the subsidiary ledger. So we're going to take a look at this in just a moment. Because we are now getting into chapter 16 for real, rather than just the brief introduction we did last class to talk about the difference between job order cost and process costing and why companies would choose to use one or the other. Before we really get into that, I just want to show you something else in the reference materials folder. We go into the chapter 16 folder. You'll notice in addition to the videos, there are a couple other pieces out here. And one is formulas that we will be using, probably not today, but possibly we will get to these today. But there's some explanation of how to use the traditional approach to overhead allocation. So these are essentially formulas, but written out in words explaining how to do that. I would also point out for next week that the chapter 16 problem is also a little bit challenging. And so there's a video here to help you through that. So if you're working on the chapter 16 problem next week, I would encourage you, try it on your own first. And don't come to the video until you've tried it on your own. But if you get stuck, you can come watch this video. Now, I should warn you, it is possible that the numbers that are in my problem are different than the numbers in your problem. I'm not sure about that. And I think I say that in the video as well. So please try it on your own. If you get stuck, then use the video. This was like a work session. There were questions on the problem, and we scheduled like a review session, and I just recorded that review session and posted that last year. If you're still stuck after watching that video, you can always ask for help. This chapter 16, exercise 16.03 is the one we're doing right now. And I honestly can't remember why that's in there. So you probably would not need to use that since you are here. I think maybe I posted that for the asynchronous online students. I can't remember why I put that in there, but it's there. I just don't think you'll need it because that's this exercise that we're about to do. Questions before we start this first exercise for today? All right, so let's look at this exercise. As I said, we're looking at the subsidiary ledger for our direct materials. Now you should have or will read in the book about how materials works, the terminology associated with that. When you requisition materials, so you're asking basically the supply chain of the purchasing department to purchase those materials for you from an external supplier. We've already talked about requesting materials to be brought from the warehouse or the storage area out onto the shop floor to be put into production. And so that's what you see going on here. At the beginning of the year, or excuse me, the beginning of the month, we had 285 units of whatever the product, whatever this direct material is. Now this is for one specific direct material. There would be a subsidiary ledger for every single material that we use. So you can imagine how complicated this would get when we're making a complex product that might involve dozens or hundreds possibly of different types of materials and different types of stuff that goes into making them. We're looking at just one material here. We are also asked to assume that we are using the FIFO method. So I told you last week when we started class that if you don't remember some of the information from financial accounting, that I would always review it. And so that's something that I need to do here. FIFO, anyone remember what that stands for? It's from chapter 6 in financial accounting. And what does FIFO stand for?
First in, first out.
Perfect. First in, first out. I heard several people say it. So that means that the first thing we do is use up the stuff that we already had. So this $285,000 worth of stuff, sorry, 285 units worth of stuff would be used before any new purchases. So since we are using the FIFO method, we need to keep our inventory in chronological order. We need to keep it in the order that we acquired it so we know which ones to say we used. So what happened? On May 4th, we received some additional units, 130 more units at a price of $32. So at that point, we would update our inventory record to show the stuff we already had and the new pieces. And we need to put the extension in for that. So I'm going to need my calculator. The extension is the multiplication, 130 units at $32, total $41.60 added to our inventory. So now what do we have? We have 415 units of whatever this material is. And then we receive a request from the shop floor saying, hey, we need some of that material. We need 365 of those units. And so because we're using the FIFO method, which ones are we going to use first? The oldest ones. We're going to use the 285 oldest ones, but we don't have 365 at that older price. So we're going to have to also use some of the brand new purchase. So there's a couple different ways we could do this. We could figure out what we had left and then back into how much we used, or we could simply do out the calculation. So 285, we could do that in red. Okay, 285 units at $30 each, and add to that. So how many more? We needed 365 total out on the shop floor. 285 were the older ones, and so that means we used 80 of the newer ones. Those each had a cost of $32. And when we use 80 of the newer ones, how many does that leave? 130 minus 80. We have 50 left.
50.
Thank you. 50 left in our ending inventory. Those are going to be the $32 ones. So our inventory is down to $1,600. And when I do the math for how much we have now used up, I did the math right. Is that what everyone else got? So in our accounting records, you think about this. So this is our materials inventory. This is one subsidiary ledger for one material that we use. And we just moved out of this materials inventory 11,000 and change worth of materials. Where did it go? It's not in our materials inventory anymore. Where is it? Stop thinking from an account. Let me see. That is it. Thanks, Madison. So it went to work in process. We physically moved the materials out of the storeroom and out onto the shop floor so they can be worked on, incorporated into the product that we're making. And in our accounting records, we moved it out of this materials inventory and into work in process. That's exactly what happened to it. Does that make sense? So now we're down to only 50 units, and so we ask our purchasing people to order some more. So we still have those $32 units. And now, as of May 21st, we have another 110 units at $38. Prices are going up. And so as of May 21st, we have a total of 160 units on hand. The older ones have a $32 price tag and the newer ones are at $38. Of those 160 units, 100 are requested for production as of May 27th. So we had 160, but we just moved 100 out, so we have 60 left. What's the price of those 60 units we have left?
$38.
$38. Yeah, because we're using the FIFO method. So we use the older ones, first in, first out. We use the older ones and keep the newer ones. And so to determine this dollar amount, the one last piece, again, two ways we could go about it. We could do the math just like we did the first time around, 50 times 32 plus 50 times 38. Or we could add together the two that we had on May 21st, 1,600 plus 4,180. So that's what we had available, 5,780. And after the requisition for those 100 parts, or 100 pieces, 100 units, we had 2,280 left. And so it must be $3,500 worth of stuff that was moved out of materials into work in process. So as I was saying, I think it was maybe even just last class, the information that we learned about inventories in financial accounting, when we were talking about merchandising companies buying the product and reselling it, really those same rules apply here. This isn't merchandise, this isn't what we have available for sale, but it's materials, and we still have to decide, well, which ones did we use first? And just like we discussed in chapter 6, for those of you who are with me in financial accounting anyway, just like we discussed in chapter 6, it doesn't need to be that what we do in our accounting records here on the screen matches what actually happens out in the warehouse. So let's say that this material was lumber. Okay, we have a stack of lumber out there. When the new lumber comes in, what do you think they do with it? Do you think they lift up all the old lumber and put the new lumber in underneath and then set the old lumber on top so that when people come to get lumber, they take the old stuff off the top? They might, I don't know. It depends probably They'll have a process for that. Is it important to use the older stuff first? Well, if this is a grocery store, if this was a food-related item or something that would spoil or I don't know, maybe the lumber would warp, and so we do want to use the older stuff first. But it's highly possible, certainly possible, that they may not always in practice use the oldest stuff first. They may look at it, say lumber is lumber is lumber, and we'll just use whichever ones are closest. And it's a waste of our time and effort to move all the lumber and put the new stuff underneath so that people use the old stuff first. Just like in chapter 6, what we do in our accounting records is going to follow the inventory valuation method that we chose, in this case, FIFO. The other options that we learned in that chapter were LIFO, average cost, and specific identification. So just like in chapter 6, it is not necessary at all that what we do in our accounting records matches what we do out on the shop floor. We may not be using the oldest stuff first. We can still make a decision that that's how we're going to show it in our accounting records, even if that's not what we actually do. Does that make sense? So let's move on.
You were saying in, I think you said it was chapter 6, the only time you really need to attribute specific prices to specific units is if they have like ID numbers or something like that.
Yeah, so we call that process, that's the specific identification. And I don't know if you guys on Zoom can hear the question in the classroom, but the question was, the only time it's important that we do match up the flow of cost through our inventory records with the flow of actual product, when is that important? And he suggested it's important when they have ID numbers. Really, it would be used by companies when they are selling a very specialized product where each one is unique. And the example I usually use is a car dealership. So the car dealership may sell only Ford cars, but they sell Explorers and Escapes and Escorts and I don't know what else, F-150s and F-250s. And even if you say, okay, we only sell F-150s at this dealership, they're still all different because they have different option packages and different colors and different whatever. And so for a car dealership, they absolutely would be using specific identification. They need to know exactly which car they sold. For our example here, could the company use specific identification? They could, but if they're using hundreds of units of whatever this material is, I said lumber, if they're using hundreds of them a month, do they really need to know, oh no, it was that log, oh no, it was that piece of material? If they're all basically the same, we get to make a decision. Do we have to know? Probably not. So, but definitely there are circumstances where companies would need to know, and there might be circumstances where companies just want to know, even if it's not meaningful.
Because I don't know if I asked you last semester, the one that kind of tripped me up was something like a computer, where a lot of the chips have their own specific number on them. So if it was something like this, where you're bringing in boxes of those chips, would you want to have all right, this is the box for number 0 to 100? And
So there are probably two separate questions there. One is, does it matter for accounting records? And two, does it matter if there's a recall or if we need to somehow trace that specific computer? So the company may choose to keep records about who got which microchip. I don't know if they do, but probably, that would be important. But do they need to know in their accounting records for their financial statements? And the answer there would be no. And that just made me think, a lot of animals now have the microchips in their ear. So if you implant the microchip in my dog's ear, yes, somebody needs to know that's my dog and I got that microchip. But the vet clinic that put the microchip in his ear doesn't need to know in their accounting records that, oh, that was chip number 1753, whatever. Does that make sense? So there's two different things going on there. And what we're concerned about is in our accounting records, does it matter? And they don't have to match up unless you say we're using specific identification and they're matching up. The majority of companies, vast majority of companies, don't have such specific products that they're selling that they need to know exactly which material went into each product.
So for the computer analogy, if they're just, if Dell's running a line of latitudes, it doesn't matter. But if somebody orders a personal with certain modifications, then it may come into play.
Right. Okay. So determine the materials inventory balance at the end of May. How much did we have left at the end of May? We have that calculated right here, right? Journalize the summary entry to transfer materials to work in process. So we asked that question back in the May 10th entry. What happened to those? Well, they went to work in process. And that happened twice during the month. So they're asking us to do a summary entry, which means they want us to add together the 2 times that we issued materials and we moved those materials from the stock room out to the floor. And in our accounting records, this is how we move them out of materials into work in process. So I'm going to go back to Blackboard just for a moment to the main reference materials page, because I told you last week that the first time we did a journal entry, I would review the form for a journal entry. And that's what's in the middle of your screen right now. You can see in the yellow picture what a journal entry looks like. These are all of the required parts. The date, at least 2 account titles, one to be debited, the other to be credited. Sometimes we have what's called a compound entry, so we have more than one debited and or more than one credited account. The debited accounts are always listed first, followed by the credited account or accounts. In total, the dollar amounts that we debit and credit must be equal. Again, you have to have at least 2 account titles, the debited one listed first, the credited one listed second. Now, what's not included on this picture is an explanation for what happened here. And we tend to leave those out for class. But if this was a real situation, you would have an explanation. You don't just do a journal entry without saying, here's why we did that. So there would be an explanation. And our explanation for this exercise would be something like to transfer materials from into work in process for the month or something like that. Very brief. If there was any kind of they might, if they were doing these separately, they might include the materials requisition number, 91, 97, something as a reference so that people looking at that journal entry in the general journal understand where to find more information about that entry. So what is our total? 14,610, right? And I know we have at least a few people here who did not have me for financial accounting, so this is your first opportunity to see what I just think is really cool technology. So I mentioned that the credited accounts need to be listed second and indented, and you might be looking at this right now saying, but it's not indented. As soon as you type a number in that credited box, that credit side, it automatically indents it for you. So you don't have to worry about that. As long as you put the credited accounts, as long as you put the dollar in the credit box, it's automatically going to indent those credited accounts. If I had done this entry backward, if I had put the materials first and still put the credit, it would look, to me, it would look very strange because it would be indented on the top, and that's not what it should look like. It needs to look like just what you see here with the credited account indented. and listed after the debited accounts. And so there's our journal entry, the summary entry. So we combine those two transfers together. Anybody with questions on that? Or general questions about writing journal entries or anything else?
So
So
assets
I'll-
have a
Go ahead.
assets have a normal credit balance, correct?
Assets have a normal debit balance. Debit. Yep. And so since you asked, let me remind you the other piece of helpful reference materials that I put out on the top of the reference folder, because it is applicable to everything we do. So this is the expanded accounting equation. And just as a reminder, so each one of the types of accounts, you can see the normal balance is the side that has the plus sign. And it does explain that here in the caption as well. So assets have a normal debit balance. So to increase an asset, you would record on the debit side. So what we were doing here, by crediting materials, we decreased materials. We moved that amount out of materials. And by debiting work in process, we're adding it to work in process. So we decreased materials, increased work in process with this entry.
What type of account is the work in process?
All the inventory accounts are assets. So that includes materials, work in process, and finished goods. They're all asset accounts. Make sense?
Yeah, that makes sense. Thanks.
Yeah, this is the first time we've dealt with these this semester, so we definitely stand to have a little bit of review. Last question then, comparing blank as reported in the materials ledger with predetermined order points would enable management to order materials before a blank causes idle time. So predetermined order points, and we talked about this a little bit back in chapter 6 when we talked about inventory management and the delicate art that it is, that we want to have enough. In that case, we were talking about merchandise inventory, but it applies just the same way here for our materials. We want to have enough on hand at any given time that we have what we need to run the business. At the same time, we don't want to have so much on hand that it's spoiling, it's warping, it's using that lake with the lumber example that I was using. It is getting lost. At a minimum, we are having to have the space to store it. We have to pay someone to move it around, to watch over it. Maybe we have a night watchman or a guard to protect the integrity of our assets. And so there's a really important balance between having enough but not too much. Because of those inventory carrying costs, which I just mentioned, things can spoil, get lost, get stolen. At a minimum, we've already had to pay our suppliers for them, and yet we aren't using them, so we aren't incorporating them into a product and selling it and getting money from our customers. It may be that it goes out of style, or it gets discontinued and is no longer part of the product because our product gets redesigned. All sorts of reasons that it's important to have just the right amount of material on hand to meet the demand. And so when we talk about predetermined order points, what we're suggesting is when our quantity reaches a certain level, when it falls to a certain level, it automatically triggers an order. And so what we'd be looking at is the quantity on hand, not the unit price, but the quantity. We wouldn't want to be looking at the total dollar amount. Because as you can see, we're in a period of rising prices. In the month of May, our price went from $30 to $32 to $38 for that same material. So we don't want to just be looking at the total dollar amount. That would be misleading. What we want to know is how many units we have on hand so that we don't run out and have to stop work, right? Causing idle time. Any questions from this exercise? Covered lots of different things in there. As always, when you finish an exercise, I would suggest that you hit, before you move on, click on the check my work button to make sure that you have filled in everything. You can check your score down at the bottom left-hand corner to make sure that you got the full 10% for that exercise. If there aren't any questions, we'll keep going. So the next exercise is also entries for materials. But it's not, we already have the materials calculated for us here. We'll go through this. We are simply asked to do a couple of journal entries and then find ending balances that would be shown in the ledger account. Kingsford Furnishings Company manufactures designer furniture. Kingsford Furnishings uses a job order cost system. So remember, we talked about last class that companies would use a job order costing system when there's a clearly defined beginning and end to their work on a specific product or batch of products or job order. Balances on April 1st from the materials ledger are as follows. And then we have materials purchased on account during the month. And during the month, we were also working on 3 different jobs where we moved, where we used materials, we moved them out of the materials inventory account into work in process. Each one of these jobs, we looked at a slide in the PowerPoint last class. And I can just go back to that. Give me a moment. It's just the materials. There it is. Okay. So that's just, I apologize. I'm not finding it. So you'll get the idea if I just pull this one up. So on the, if you think of this as it applies to the exercise we're looking at, that company, the furniture company, had 3 different jobs in process for 3 different jobs, I think, in process during the month, 601, 2, and 3. They would have a separate card, just like this. It may not be a physical card. They used to be. They certainly used to be. But they may no longer have a physical card, but it's a single location in their accounting records in the computer at a minimum. And each one of those cards would have, in the work in process account, would have space for direct materials that had been assigned to the job, direct labor for people who were working and logging their time, assigning it to that job, and then overhead that's being applied or allocated. And again, in this chapter, we're going to see how that works. If we add those 3 cards together at any given time, it would give us the balance in the controlling account, the work in process inventory account that shows up on their financial statements, on their balance sheet. Oops. Sorry. And so during the month of April, there was a card, a separate card for job 601, 602, 603. And each of the 3 direct materials, fabric, polyester, filling, and lumber, were being added directly or recorded directly in the job or on that card for job 601, 2, and 3 separately. for each one of those direct materials. Now you'll notice the glue, which is one of their materials, but it's not a direct material. We don't measure and assign directly to the specific job based on the number of ounces or grams or whatever of glue that we used. Instead, glue is considered an indirect material, which means it becomes part of the product. We wouldn't have this expense or this cost if we weren't making the product, but we're not going to bother tracing it to a specific product. Either it's not convenient, maybe it's not even possible. Maybe, the glue is just painted on, or I don't know. And so there's no way of actually measuring how much we use. At a minimum, I would say it's not economical. It doesn't make sense because it's a tiny little bit of cost compared to the rest of the cost. And you can see that out of $1.7 million, it's less than 100,000 is from the glue. So they've determined that it's not either not possible or not necessary, it's not material, that they assign it to specific jobs. And instead, they simply throw it all into the overhead account. They know what's going to get to the product when we allocate that overhead. Journalize the entry to record the purchase of materials in April. And so we're doing this in one lump sum. We are told here the materials purchased during April were purchased on account, and we can see the 4 different materials. So if we add those up, we're going to know the total amount that we spent on materials this month. Anyone have a total for that? What does it mean? What does it say that the materials were requisitioned? So they were, another word for that is requested. So the people out on the shop floor, the people, maybe a supervisor, sends a formal request out to the warehouse and says, hey, we need more of this. And it says specifically, we need 3 sheets of plywood. We need 14 pallets of wood or whatever. So they're asking for it. They're requisitioned to be used in the purchase of the product. That makes sense? And not purchase of the product, the use of the product. So they're requesting it to be moved from the warehouse out to the shop floor where it's going to be used. And we are then going to move that cost from materials into work in process. Our first entry, though, is to record the purchase of materials. Did anyone have a total dollar amount for that? How much we purchased? We're given right here. Materials purchased during April. Someone give me the total on that. Nobody has a working calculator today? Can't be worse than the cell phone calculator that I'm trying to use.
Did you say it's just the 4 materials, like the fabric, polyester, lumber, and glue?
Someone just posted in the chat. Yep, that's the number I got, 1,770,000. And so I'm putting in the dollar amounts, the debited account first, followed by the credited account. When we purchased these materials, we increased our materials inventory. And it says we bought them on account, so the credit side would be, now we have to pay for it, accounts payable. The next item asks us to journalize to record the requisition of materials. So these are the requests coming from the shop floor to the warehouse or wherever our storage facility is. Hey, we need those, could you send them out? And it's a formal request because they need the paper trail so that it gets entered correctly in their accounting and they're keeping track of the materials that are assigned to each job. So this is the summary entry that we are doing, the requisition of materials. And so we're looking at the totals here. As we saw in the last exercise, these totals are being moved out of the materials inventory. I'm going to do that first. And there's our total, so we didn't have to do any math for that one. The total that was requested for all 3 jobs plus the indirect materials during the month, $1,747,600. Moved out of materials and into, well, most of it moves into work in process, but the indirect materials is part of factory overhead. So I'm going to take the shortcut here and do the factory overhead part first because that doesn't require me to do any math. That amount's already given to me. The factory overhead, the glue, $83,600. And now I have just one calculation to do. Take our total, $1,747,600, and subtract the glue, and we will have a total for the other 3. If you're not working with a ridiculous calculator, it's probably just as fast to add up the other 3. I try to take shortcuts to save the number of buttons I need to push on my calculator. Everybody good so far?
Yeah.
Okay, so then we're asked to determine the balance for each one of these accounts at the end of the month. So we're given the beginning balance for each one. Okay, we'll start with fabric. I'm going to, I'll just put my calculation over here. So as we normally do, we start with the beginning balance. Remember, there would be a subsidiary ledger for each one of these materials. So there'd be a subsidiary ledger account just for fabric to keep track of how much fabric we have. We need to know how much fabric, how much filling, how much lumber, how much glue we have, not just the total amount that we have, because imagine this conversation. We need some more fabric. We should order some. No, that's okay. We've got plenty of polyester filling. No, we don't need to know the total of our inventory. We need to know for each one of the individual components. So we would have a separate ledger, subsidiary ledger for each one of these. For the fabric then, we started the month with $58,300. We added to it our purchases of $820,000. We then used, for fabric, I've got 3 amounts there because I have it separate. Is there a total that I just can't see? Yeah, this wasn't scrolled down far enough. So we used $810,000 worth. Of fabric. And so our ending balance, we need for that to be red, our ending balance would be $68,300.
Do you know where you got the 58,300?
Where did I get that?
Yeah.
Yeah, it's right here.
Oh,
just need
geez,
to
I
scroll
just
up.
had to scroll up there.
Yeah.
Thank you.
I had the same problem, obviously. I just had to scroll down. So some of these exercises take up a lot of room. So beginning balance plus purchases minus use equals ending balance. So that's, again, if we look in the chapter 15 folder at those basic calculations, we've got that calculation right here. Okay, so you always have that there to use as reference. If you find yourself going back to that folder over and over again to remind yourself, you may want to consider just printing that little page or copying it onto your notebook or whatever, wherever you might keep notes. But it's always there in Blackboard for you if you need it for reference. And so we're going to follow that same formula for each one of the other 3 items. I'm going to ask you to do that on your own, and I am going to stop the video to allow time for that to happen. So go ahead and do those other 3 calculations and then restart the video. So you should have found the totals. I have the formulas here on the screen in case you needed to see those. But the ending balances for the polyester filling should be 25,000, for lumber 79,800, and for glue 6,350. The formula again, beginning balance plus purchases minus use or requests or requisitions gives us our ending balance. Now I'll go ahead and put my green check marks in there. Any questions before we move on? Okay, let's keep going. So we're moving away from direct materials and now talking about direct labor in our next exercise. So direct labor means it can be traced to a specific product or batch of products. We discussed last week when we talked about what overhead is, we discussed that overhead also might include some labor, probably does include some labor, and that would be indirect labor. I had mentioned that on someone's time card, they may even be keeping track, either by using scanning a barcode for the job that they're working on as they move from job to job. They may be even going that far to be as precise as possible to make sure that they're accurately capturing their costs. What is our time being spent doing during the workday? And so we have 3 employees here. They're assigning their time to 3 different jobs, and some of their time is spent on indirect tasks. And we have a description here of what that included during this week. Training, quality improvement, and other indirect tasks. And I had suggested, as we talked about this in an earlier class, that other things they might be doing include maintenance or cleaning up around their equipment, doing general type of work that can't be assigned to a specific job because it benefits the entire company or the entire process that they're working on. And so these process improvement hours are going to be assigned to the product. We wouldn't have these costs if we weren't making the product, but we can't assign them directly to job 301, 302, or 303. And for that reason, they would be added into the manufacturing overhead account, the factory overhead account, and they will get allocated using whatever process we determine to allocate our overhead. So they definitely are part of the cost of the product, but they're not direct costs. They're not prime costs. We're asked to journalize the entry to record the factory labor costs for the week. If an amount box does not require an entry, leave it blank. So this is going to be a summary cost. Let's see how many hours each worked. Maybe put a total hours in here. So for Tom, I don't know if they all work the same number of hours. Tom worked 40 at least. Whoops. Tom worked 40. How about David? David also worked 40 hours. And so did Jose. They each are paid $32, $36, and $28 total. So we can determine their total pay by just multiplying, and there's no overtime here. Whoops. Okay. So now we can total those to find our total payroll. Oops. $2 something there, that was a mistake. So where did the total of 40 come from? I just added across each row how many hours each employee worked on each of the 3 jobs plus the process improvement. So I was just adding across this row, 10 plus 15 plus 13 plus 2 is 40. And I did that for each one of the 3 employees to verify that they did work the total of 40 hours, which is the typical, or has traditionally been the typical full-time hours. So now we know how much we spent on labor, and regardless of whether they were working on a specific job or those process improvement tasks, we're going to pay them for all of the hours that they work. And so I'm going to assign the wages payable credit first, because I already know the total that we're going to pay them, $3,840. But some of the labor is going to go to work in process, that's the direct labor, and some of it is going to go to the factory overhead account. So again, I try to do things the easy way when I can. So I'm just going to calculate the factory overhead piece because that's the easiest one to calculate. So looking at the factory overhead dollars, I'm going to call it. So Tom worked a total of 2 hours at $32 an hour on what we're calling overhead. David also worked 2 hours at $36 an hour for $72 total. And Jose worked just 1 hour and his pay rate is $28 per hour.
How did you get the overhead totals? I mean, I didn't quite see where the hour totals came from.
So I was looking at these dollars, or sorry, not dollars, these hours right here in the process improvement column. Those are the hours that were assigned to not a specific job, but these other tasks, training, quality improvement, as I suggested, cleaning or maintenance of their machines and so on. So Tom worked 2 hours on process improvement and he gets paid $32 an hour. So his total pay was $1,280, but $64 of that was not assigned to a specific job, but instead was that indirect labor. Does that make sense?
So you just multiply the process improvement with the amount earned. So like the 2 times 32.
Yes, exactly. This is hours, this is dollars per hour. I multiplied those together to get the total dollars that were indirect labor or process improvement. And for the 3 gentlemen, it was $164 total. And so that's how much I would need to debit to factory overhead. And the rest of the wages then were assigned to specific jobs. Now, we could have done 38 hours at $32 per hour and gone through that whole extra step. But what do I already know that a journal entry has to be balanced. The debits and credits have to be equal. So if we credited 38.40 and one of the debits is 164, the other one must be 36.76, and that was much faster and easier than doing out the math. 38 hours for Tom at $32 an hour plus 38 hours for David at 36 plus 39 hours for Jose at 28. Just easier to do it the way I did it. Faster, more efficient. At the same time that we're adding these totals to the work in process, remember, we would be tracing only these hours to job 301, so these 33 hours, and 40 hours went to job 302, and 42 hours went to job 303. So remember, we have those subsidiary ledger cards where we're keeping track of just the cost for job 301, just the cost for jobs 302. This is the summary entry for all of the wages, but we need to keep track of the detail for each job as well.
Now, in practice, you probably need some sort of system or have them change whatever they're working on in like the clock in, clock out system, to keep track of this, right?
Yeah, and so it depends, you know, it depends on how high tech your company is. So you may, depending on whether the employees or the supervisors have access to a computer, the supervisor might be keeping track of that. They really do use barcodes and scanners and scan the job that they're working on. But if you're a small company, are you really going to go through all of that? If you only have one job in process at a time, all of your costs are going to that one job. If you only got a couple, you might just keep notes, and it might be just approximates. Well, on Monday, Joe worked on job 1, and on Tuesday, he spent half the day on job 1 and then half the day on job 2. So the totals are what shows up on your financial statements. So the individual divisions, of course, are important for us for internal. Remember, this is managerial accounting. This stuff is all internal. And it's important for us to know, did we get the right margin on that job? Did we make enough money? If we're doing a time and materials kind of job, this is what we're going to bill our customers. So it's important that we get it right. We're not going to be billing them for the process improvement time if we're just charging them by the hour. So there are reasons it's important in some cases to have it be more accurate than others. But all of this is internal information, and so really the process is going to depend on each individual company and what level is important for them and what level is possible with the technology that they're using. Because it may mean someone having a physical card still and writing on that card. Other, go ahead. Did you have another question?
No.
Any other questions at this point? Okay. Assume that jobs 301 and 302 were completed but not sold during the week, and that job 303 remained incomplete at the end of the week. How would the direct labor cost for all 3 jobs be reflected on the financial statements at the end of the week? So the jobs that were completed and not sold would be in finished goods because they haven't been sold yet. If they've been sold, they would be moved to cost of goods sold on the income statement. Because they've been completed, they're not in work in process anymore. Because they haven't been sold, they're still in finished goods. But job 303, which is still in process, would remain part of work in process. And so that is how it would be reported at the end of the period, at the end of the week. Questions, anybody, before we move on? Oops. Oh. So our next exercise deals with factory overhead. And we've alluded to this a few times already, but I want to just hit a couple of high points in the notes before we look at our next exercise. So factory overhead, we know from our first class, is part of the cost of the product. But it's not a direct cost. We've already referred to indirect materials, that glue, indirect labor, those process improvement hours. Those are costs that are related to the product. They belong to the product. We wouldn't have those costs if we weren't making a product. So they need to be part of the product cost, but we don't have a way to easily, conveniently, economically trace them to a specific product or batch of products, specific job. So we need to, if you think back to that flow chart, the hand-drawn one that's in the chapter 15 folder, feel free to take a look at that if you'd like. The factory overhead costs then are added to a cost pool called factory overhead. And they hang around, they swim around in there for a little while in the pool. And then maybe when we finish the job, maybe when a certain milestone is reached or a certain accounting entry is made, we'll talk about that, we then allocate or assign those costs to the product. It's a two-step process. The costs are incurred, they go in the overhead account. Then that dotted line in my picture, they're allocated to the product. As I told you, in this chapter, we're going to be looking at what is known as the traditional approach to allocating overhead. And I already showed you at the beginning of class that folder in the chapter, that page in the chapter 16 reference materials folder that gives you kind of a walkthrough of what we're just about to talk about. So to allocate costs, allocate those overhead costs, we have to decide what valuation, what number, what quantity or amount we're going to use to allocate it. And that is called the allocation base or the activity base or the activity driver. You can see those terms right here in this square bullet point. I tend to call it the activity driver or allocation base, but typical ways of allocating those costs, you can see down there at the bottom of the screen: direct labor hours, direct labor dollars, machine hours. The company really can determine any quantity, any measure, any activity base that they think is appropriate. What they're looking for is, what do we think makes these costs different for job A than they are for job B? What makes these indirect costs different for the various types of products or jobs that we're working on? And under the traditional approach, we choose just one activity base. A couple weeks from now, we'll be looking at activity-based costing, where we identify multiple activity-based and have multiple ways of assigning these costs, assigning different costs. The traditional approach is one cost pool, one cost driver, allocate the costs. So when I said we might allocate them when a certain thing happens. So if we're using direct labor hours as our activity base, when we record direct labor hours, we would also allocate overhead based on those hours. When we record machine hours, if that's our activity base, when we record machine hours, we would also allocate the overhead costs based on those machine hours. So it may happen because it's the end of the accounting period, the end of the pay period, if we're using direct labor hours or direct labor costs. It may happen when we finish the job. So each job, if we're using machine hours, when we finish the job, we look at, well, how many machine hours did that take? Okay, let's assign the overhead. The point is the overhead gets assigned to work in process. So it's part of the cost of the product when that product is completed and is moved into finished goods. This is the part, again, part of the summary of what I have for you in Blackboard. The first thing we have to do after we decide what we're going to use as our activity base, the first thing we have to do before we even start work is calculate the predetermined factory overhead rate. Predetermined because it's calculated before we start the period. This would be based on our budgeted numbers. So the estimated total factory overhead cost means what's in our budget? What do we expect to spend on factory overhead this year? And then we divide that based on the estimated level of the activity base. So let's say we're using machine hours. The denominator of this equation would be how many machine hours do we think we're going to work this year? Numerator, how much do we have in the budget for factory overhead? Denominator, how many machine hours? And so the result would be some number of dollars per machine hour. And every time we record machine hours for a job, we would allocate or assign overhead based on that predetermined rate. So it's based on the budget. It's not going to be perfect. So there's an example. $50,000 divided by 10,000 direct labor hours. For this example, they're going to allocate $5 in overhead for every direct labor hour that's worked on that guitar. As I said, we'll be talking about activity-based costing in an upcoming chapter. It's chapter 19. We then apply overhead based on the actual number of machine hours or direct labor hours or direct labor dollars that are incurred. And at the end of the period, we're going to have a difference because the allocation rate is based on the budget and the actual allocation is based on actual hours. So the actual dollars we spend and the actual hours we work are likely going to be different. And in some cases, they're going to be really different from what the budget thought was going to happen. And so at the end of each accounting period, we have to reconcile that. We're going to have to adjust for those differences, adjust for the fact that our estimates were not perfect. We don't, they're not going to be perfect. We know that. We just have to fix it at the end. And that's the process that is described to you in that page in the chapter 16 folder. Let's go to our exercise and see how we use this. We have 7 minutes left. And this is the first semester in years that my class hasn't ended at 45. So I might occasionally need to be reminded that class ends at 10:40, not at 45, because that's what I'm used to. Eclipse Solar Company operates 2 factories. The company applies factory overhead to jobs on the basis of machine hours in factory 1 and on the basis of direct labor hours in factory 2. Estimated factory overhead costs, direct labor hours, and machine hours are as follows. So we're first asked in letter A, determine the factory overhead rate for factory 1. So in factory 1, they're using machine hours. So this is step 1. This happens before this is based on the budget. It happens before we even start production for the year. And the formula, remember, was the estimated cost for factory overhead for factory 1, that's $18,500,000, divided by the estimated level of the cost driver. How many machine hours did they expect to work? 1,250,000. So their predetermined overhead allocation rate is $14.80 per machine hour for factory 1. Go ahead and do factory 2 on your own, keeping in mind they use direct labor hours at factory 2. So each factory they decide what they're going to use as their cost driver, then they determine, based on their budgets, they determine what the overhead rate will be. Any questions about those?
That one.
You have a question?
Missed how we calculated that.
Which one? A or B or both?
Well, to do be on our own, so
Yeah. So for B, factory 2, we take their $44 million factory overhead and divide by, they use direct labor hours as their cost driver, so we divide by their direct labor hours. So 44 million divided by 800,000, $55 per direct labor hour. Does that make sense?
yeah, that was the 55.
Yep, that's a 55.
And
Did
so number
I'm not sure if your sound is
so
cutting.
did you use the 1,02,500 for the letter A, or
For factory 1, it said that they use machine hours. So we took their total budget of 18.5 and divided by their estimated machine hours. Yep.
okay, got it, thanks.
Yeah, I think your sound is cutting out maybe a little bit, JP. Just so you know. Okay, so we have our predetermined overhead rate. Now we start actually making whatever it is that we make in our factory. And in letter C, we're asked to apply the factory overhead. So we apply it based on the rates that we calculated here in A and B, and on the actual level of the cost driver. And again, these are, let me just pull that up, that page in the chapter 16 folder. So this is what I explained here in step 1, then step 2, and step 3. So step 1 is finding that overhead rate. Step 2 is applying it. So we multiply the predetermined overhead rate by the actual level of the cost driver. So for factory one, they use machine hours as their cost driver. Their actual machine hours for August were 105,000 hours. And we had calculated in advance that we were going to apply $14.80 to each one of those machine hours. 105,000 actual machine hours times $14.80, our rate, budgeted rate, gives us a total of $1,554,000. We move it out of the factory overhead account and into work in process. And we are 1 minute from being out of time. So please try factory 2 on your own. And this is where we will pick up on Tuesday.